I tried same.
Hi, good morning. Mr. Pradeep, can you hear me?
Yes, yes, I can hear you.
I was a little worried whether I was doing that.
No. It is a pleasure. It's a pleasure to see you
Very
on the
good, very
video.
good. What we can do is like, okay, yeah, you can keep the screen as it is. For those who have joined in, please feel free to keep your video and mic open. So we've got another 5 minutes to start.
I see some of the participants are
Okay.
my close friends, actually. So I'd like to welcome them all.
That always happens. That always happens.
Yeah. So
Very good.
apart from you, I have people known to me. Geeta is there, Geeta Bhatia. Then, of course, Muhammad Ali is there. My
Okay.
very good and dear friend, Mr. Zahoor is there. And there are some other people as well. So let me
Okay.
extend my welcome to them all. And it's my pleasure.
That's very good. That's very good. It's also good to have some known faces in the crowd. Vijay, good morning. Your mic. Okay, let me see if I have.
Yeah, that's good. How are you?
Very good, and yourself?
All right, thank you. Yeah.
After such a long time.
It has been. Yeah, and of course.
I think you and Mr. Pradeep, you know each other.
Well, more than, yeah. We have been.
Vijay is, I often talk of him when we are talking about certain transactions in my X. And one example I have in these slides as well, where Vijay actually supported me on that particular business,
Okay.
So I remember that was maybe more than 10 years ago. There was a transaction I was not very happy about. And I was new in ABC. The only person who supported me, no, Pradeep is right. I'm not going to do this transaction is Vijay, actually.
How are you, Pradeep?
I'm very fine. It's a pleasure to see you.
Yeah.
I do talk about you in my programs, and in fact, vicariously, you are known to most of the people in Bahrain, I would say.
We have been, Malavan, partners in crime for some time.
Yeah, I know.
Yeah.
I know.
Partners in other
Those
people's
who are not,
crime.
Yeah. Though, Vijay, now that you are there, I would also, I thought that I'll say something about you, but can you quickly, introduce yourself to the audience, if you don't mind?
Oh, sure. Thanks. No, so just my background, so as a banker, 30 years, it's half of it is in relationship management and frontline, and the other half in risk management. The last part of it, the last sort of years was with Bank ABC, or what was Arab Banking Corporation, as the group CRO. But my entire banking career has been with banks that have been commercial banks, corporate banks, a lot of trade finance, so something that's quite close to my heart. And Pradeep, of course, has been one of the experts I've relied on over the years. So wonderful to be here.
Great. Thank you. Welcome.
Always very humble when you're introducing yourself, isn't it, Vijay? You never try to show off.
Maybe I can also ask Zahoor to quickly say something and put on his video. In case he's listening to me.
Who? Sorry?
Zahoor Dattu.
And I would say for me, it's midnight in California. Just wanted to hear the expert's opinion and look at his presentation. Pradeep is very well versed in trade finance, in all the facets of trade finance products. And we have been contributing a lot in our UAE Trade Finance Forum. So I know Pradeep since many years, and he's very knowledgeable. He writes articles, and I appreciate his efforts in educating the banking community. So thank you, Pradeep, and wish you all the best.
Thank you, Zahur.
I hope your son Sagar is doing fine as well.
Yeah, he's in US at the moment. He's in New Jersey. He was in California, just he moved 2 months ago.
Thank you.
So Pradeep, are you at the moment in Bahrain?
Yes, I'm still in Bahrain.
Yeah, excellent.
Very good.
After my retirement, I opened this company.
Yes, correct. I
Okay.
also briefly spoke to Krishnan, so he was remembering you.
Oh, yeah.
Good. Mr. Pradeep, it's 10 o'clock. Shall we start?
Yes, of course.
I'll make sure that people don't fall asleep.
Yeah,
Okay,
yeah.
and then I'll pass it on to you. So, good morning, everyone, for joining us for this discussion. I know it's a weekend and it's very difficult to get up on a Saturday morning. So, thank you. We really appreciate that you have joined us. Some of you may have attended our previous sessions. For those who have not, I'll keep the rules as simple as possible. Bear in mind, this is not a formal event. It's a very, very informal event. That's why you find Vijay in casuals. So don't worry. Okay. So it's a very informal discussion. We don't have a Q&A at the end of the session. You can ask your questions right from the beginning. Stop us whenever you have a question. Just interrupt us. There's nothing wrong with that. Ask your question before you forget. When you're asking a question, please unmute your mic. At all of the times, keep your mic muted. You're most welcome to keep your video open. One of the challenges presenters have is when they are addressing a question, they would like to know to whom they're addressing. A dark screen is not helpful. It's a bit scary, especially for old people like us. Okay, so just unmute your mic, ask your question, keep it very simple. Since you're limited by time, it's only for 1 hour. I don't want, I think some of the participants wouldn't like the program to be stretched for 90 minutes or 2 hours. So let's keep it as simple as possible. The topic is pitched at an intermediary level, not at a beginner level. So if you have any questions later on that you'd like to address, Mr. Pradeep, just email to us. I think everyone who registered has my email ID, malavan@serendiptraining.com, and I can relay that question to Mr. Pradeep. Okay, and this session is being recorded, and once the session is over, we're going to share this recording with everyone. That's number one. Number two is in terms of issuing, everyone gets, all those who are attending, I would say all those who are participating are going to receive the certificate. So towards the end of the program, we're going to allow you to type the name that has to appear on your certificate. Just type it onto the chat and we'll pick it up. We'll get the certificates ready and email to you. Okay, I think that's all from my end, Mr. Pradeep. So you can take over. Thank you.
Yeah, thank you. Thank you. Good morning and welcome to all. It's my pleasure to be making this small presentation on a very, very complex subject like trade-based money laundering and trade finance frauds. Malvan is a good friend of mine and we have been interacting for a long time, and he suggested let's do something together. And recently when we decided this program, he said that let's this presentation be interactive. Let it be slightly different and let it be a kind of discussion forum where we can share our knowledge with the participants and vice versa. Participants can also participate. So one sec. So the first slide that I am posing to you is a question actually. So that's my first step towards audience participation. What is trade-based money laundering? So can you Tell me, what do you think is trade-based money laundering?
Yeah.
You're most
Good
welcome to
morning.
unmute your mic. Please
Good morning. My name
unmute
is,
your mic.
yeah. I have unmuted. Good morning. My name is Nagaraj. I'm calling from Bangalore. Good morning, Mr. Pradeep. See, trade-based means earlier we used to do account-based. We used to use the account to, route the money which is earned through illegal. Now what we do, we take the shelter of a trade. We raise an invoice, and then either we over invoice or under invoice and try to send across the borders either more money or receive short money. So we use the trade as a shelter, as a reason for laundering money. That's, in simple words, I thought I'll contribute this.
Right. Anybody else would like to say something? Quickly. Okay, thank you, Mr. Nagarajan. Everyone in today's world of compliance regime and AML regime knows what is money laundering. There is no difference between money laundering and trade-based money laundering. The objective is the same. The modus operandi may be different. The only difference is that in case of trade-based money laundering is done using the mechanism of trade. So these are some definitions. Of course, as announced by Mr. Malvan, we will be sharing this presentation to all the participants. I have this one definition given by Financial Action Task Force. It's a process of disguising the proceeds of crime using the mechanism of trade. And there is this statement which actually appeared in the best practices paper on trade-based money laundering released by Financial Action Task Force in 2006. It says, as the threat of AML and counter-terrorist financing measures have become increasingly effective, trade system is expected to be abused more and become more attractive for money launderers and terrorist financiers. That was in 2006. To be honest, I felt that FATF was being little more pride in their AML measures and standards they have introduced. But I came in trade finance in 1981. I was in India. Goods that are being imported allowed under the policy or not, and there would be that kind of open general access license and specific licenses. Every year the policy will change. At that time, within 2 months, when the policy was about to change, I saw some strange practices I did not understand. I was just 2 months old in trade finance. But then I realized that what they are doing, and then my interactions with the customers, with the banks, and then, when I moved to another bank, I realized that Indian exchange control regulations were being violated by under invoicing and over invoicing, and how the foreign exchange could be remitted out of India. So this was not something new that came up in 2006. I have seen in 1981, and most likely that it was continuing even before that. The same sentiment was also used by Monetary Agency of Singapore. They released a paper, guidance note on AML and CFT, in which they mentioned the same thing, except that they also said that trade finance can also be used for proliferation financing. Now, this is the second question that I had to like to pose. We already used 2 words. My friend from Bangalore used these 2 words, under invoicing and over invoicing. So what do you think are other most commonly used means of trade-based money laundering? In fact, Financial Action Task Force, they have given a number of techniques and typologies, but the 5 are most commonly used. One is under invoicing, second is over invoicing. Can we think of third, fourth, and fifth? So I'm
the absence of documents. So just having documents and no real underlying trade transactions, so fraudulent documentation.
Yes, of course.
One we saw a lot of.
Any other?
No goods movement at all. There's no goods movement.
That's what Mr. Vijay has pointed out is about the non-existent cargo or documents being presented to the banking system with no goods, underlying goods. Okay, these are the 5.
Yeah.
Traditional means or most commonly used means. One is under invoicing, over invoicing, multiple invoicing, under shipments, over shipments, and false description of goods. So these are the 5 where even Financial Action Task Force also emphasized on. So we will go one by one in each one of them. I just showed you the 5 most common. You know, what is under invoicing and over invoicing? So what happens is that assuming I am selling my goods as an exporter from one of those countries, currently, for instance, Libya, or recently Algeria, where you have exchange control regulations. If you are importing something into the country, you need to have the regulatory approvals. So what you do is you cannot make money, remit money out of the country unless you got the necessary approvals. So what you do is you open an LC, which is asking the exporter to sell his goods at a price higher than the real price. So for instance, $500,000 worth of cargo is being shipped for a price of say $1 million. So in the process, when the documents come in the banking system, $500,000, the differential amount moves out of Libya or wherever. So the importer is able to generate money or foreign exchange out of his country. And he tells the exporter that please remit the difference amount. You can take your cut and remit the difference amount to my Swiss bank account. So that's under invoicing, over invoicing. Now, what the benefit the exporter is getting is definitely more price than the goods are. So he can claim income tax benefits, tax subsidies, or other incentives from in the countries. Even like UK and US, there are export promotion schemes. So under those schemes, the exporters, the more money you bring in, the more benefits you get from the government. So there is an advantage. On the other hand, if you are under invoicing, what happens is the money moves out of the exporter's country to the importer's country, and the importer, by declaring lower value of the cargo to the customs, is actually taking benefit of lower customs duties. In the second box, if you see that there are some information which is relevant for assessment of money laundering and terrorism financing, etc. Invariably, these 2 companies, in case of under invoicing and over invoicing, they will be affiliates or maybe the same company. So they are in collusion. Now, this is a small picture I'm showing you. Here you can see that the exporter is shipping $2 million worth of cargo and invoicing $1 million worth of cargo. So as a result, $1 million is moved from exporter to importer. Multiple invoicing is the same genuine shipment. It may be a genuine shipment or may not be a genuine shipment, but the same invoice is presented to multiple banks under maybe multiple letters of credit to basically raise multiple financing from the banking system. So what really happens in case of multiple invoicing, it's an outright fraud, I can say. Now, this is a another technique which is known as overshipment or short shipment. Now, overshipment, actually what happens is that the exporter is exporting 100 metric tons of cargo, but he is declaring the quantity of the goods as higher. That is overshipment, or lower, so that the net effect is the invoice prices will be raised or reduced, and he will be able to move money out of his country or receive more money in his country. So this is an example of overshipment or short shipment. Exporter is shipping, say, 1.5 million unit of goods at the rate of $2 each, which is $3 million worth of cargo, but he invoices the exporter for $2 each for $1 million units, which means that although goods are for $3 million, he's under declaring the quantity and under invoicing that way, although he has not changed the prices. So, trade finance frauds. I like to pose a question to the audience, maybe two questions. Have you ever come across trade finance frauds in your organization? In the department that you are working in or the bank, have you ever seen a trade finance fraud? Of course, Mr. Vijay is...
Yeah.
Yes.
I have come across once very, of course, a small value. It's about just $50,000, where he was supposed to import. It was a open account basis. He was supposed to import granites, but I know the documents came to us, and then we paid the documents since the customer provided for the funds. But when he actually went and took delivery of the goods, instead of granites, there was something which are unused, waste stones were there inside, which the customs found out, and they came back to us whether have you paid this money and all that. Of course, finally it was the money was got back, and somehow he was booked and all that. This is one kind of wrong, shipment of goods where I have come across a small amount of trade financing fraud.
Yeah, that's you are in India, but I can tell you in India as well as in Middle East, in GCC, there cannot be a trade finance banker who has not come across a trade finance fraud. Anyhow, my second question that I have for you, do you have a fraud risk management officer in your bank?
Mr. Pradeep, I'm just launching the poll, so
yeah, there is a
everyone
poll.
can join in. Yes.
Yeah.
So you can ask them to answer just the first question.
The first question, please. So we are requesting the audience to participate in the poll. So there is a question. There is this poll on your screen. So we have, all three. So 75%, yes, 80%. So you have a fraud risk management officer in most of the banks, which is quite encouraging. So now the second question, of course, is if the answer is yes, who does the fraud risk management officer report to?
I think if it's no, Pradeep, I can't submit the answer. So.
Yeah, if it is no, of course, you cannot. Actually,
no, I can't submit my answers to the poll because I can't click on it.
Oh, I see. Okay.
Yeah.
But you have something, you would like to say something based on your experience?
So, sorry, for me, no, I think it's, there's increasingly a need to have fraud. So I think now what banks are doing is they call it more financial crime, and they either put it with compliance in financial crime, the whole AML piece, or they are keeping it with operational risk. I think the important thing is the last question, is everybody trained in fraud? That is perhaps more important than having a department. separate.
Exactly. No, that's very important, of course.
Yeah.
In fact, I was, coming to that. I understand in United States, the regulatory authorities have now required mandatorily every staff of every bank to undergo this trade-based money laundering training, in addition to the AML training. Here in the GCC countries, the regulatory authorities require every bank, every staff of every bank to undergo in AML training, but they are still silent on the TBML training. So thank you for your participation in this poll. Coming back to trade finance frauds. Now, there was a question which was asked to me, what's the linkage between trade-based money laundering and trade finance frauds? The linkage is very clear. Okay, Nagaraj has pointed out in the chat that even in India, regulators have made it mandatory, which is quite good. Good news. So, see, what happens is all the techniques of trade-based money laundering involve misrepresentation of facts or making a false statement. In every legal system, including common laws, misrepresentation of facts or a false statement deliberately made by one party to the other party for the purpose of inducing the other party to enter into a contract, falsely believing the statement to be true, and then sustain financial loss is a fraud. So all trade finance frauds are financial crimes because they include misrepresentation of facts. However, vice versa may not be true that all attempts to launder money using the mechanism of trade finance, they misrepresent or understate. So all TBML transactions are fraud. All fraudulent transaction may not be an attempt for laundering money. It may be simply a financial crime. Now, this is, of course, some people may be knowing this gentleman. So now this is my another question. Do you know him? Do you recognize him? I see something in the chat box.
No,
They could just put a thumbs up.
Zahur, Mr. Zahur might be knowing this gentleman. Zahur, you are there.
Well, to be very honest, I think if my memory doesn't deceive me, it could be one of the guy from Solo Industries, Madhav Patel.
Yeah, he's Madhav Patel. I knew that you will know him. He used, when Solo Industries happened in UAE back in 1999, 500 banks, including, you name a bank, ANZ, Citi, Union National Bank, Emirates Bank, ABN AMRO Bank, they lost 26 banks in UAE lost $500 million. And he very successfully used the mechanism of letters of credit and all these techniques, which I have showed you, the 5 traditional techniques he used for laundering money and then one fine day it disappeared. And that time they dubbed it as the fraud of the decade. In fact, Citibank delayed in their history their balance sheet because they had lost, I think, close to 240 million. ABN AMRO lost 100 million. Emirates Bank lost 100 million. Union National Bank lost 40 million. And the story is similar with a lot of banks. Why I brought him here? Because I'm tempted to quote Mr. George Santayana, who said that those who forget lessons of history are condemned to repeat it. So this is what happened. In one of the cases, I'm just giving one example. In this case, what happened was he did an actual shipment of 40 metric ton of lead ingots and presented 10 set of documents under 10 different LCs to 10 different banks for 400 million metric tons of silver in court. So here, this non-existent cargo, multiple financing, and then, this all this he did, all these. He walked away with money for 400 metric tons of silver in court, as against a real shipment of 40 metric ton of lead in court. Now, this is actually somebody talked about phantom shipping in the chat box. Yes, there is something called phantom shipping, which actually Vijay also pointed out, of the non-existent cargo. When documents are presented to the banking system, but no shipment ever took place, also known as ghost shipping and phantom shipping.
There was the Brazilian sugar, if I remember, there was a time when that was a big scam. There was supposed to be sugar, but it was salt or just some sort of white powder.
Yes. Actually, Brazilian sugar frauds have been very known in the market. Of course, that was in the late 80s and mid 90s when these things happened. But of late, very recently, I can tell you, Brazil's name has once again come up in another technique of trade finance frauds. In fact, when I recall that in Brazilian banks at one point of time, I was trying to promote the membership of ICC, Commercial Crime Services, which is International Maritime Bureau, with some Brazilian banks, and they told me that they don't want to, for the reason that Brazilian controls are so great that there will not be a chance of fraud. They have some system, etc. But unfortunately, when FATF created this document on best practices on trade-based money laundering, somebody from Brazil, investigating authority, was also a part of that task force. And in fact, they gave examples of trade finance frauds in Brazil. And very recently, clone bills of lading have been come to be known to be of use in Brazil. Or the Shell company. So now I'll quote an example. This is a multi-billion-dollar fraud. Let me mix two things. One is secondary market forfeiting frauds and shell or use of shell or fictitious companies. So what happened was I started forfeiting business. I was working with ABN AMRO. ABN AMRO, as you know, that they exit Bahrain and a lot of countries back in 2002. And my bank wanted me to start forfeiting business because they thought we were a small bank and the bank did not have a big asset base and we didn't have the wherewithal. So what you do in order to increase your trade finance assets, you go to the secondary market and buy transactions in the secondary market. And as long as it was, the first bank, which was Bank Muscat, but Bank Muscat was converted into a standalone bank in Bahrain known as Bank Muscat International. And they wanted to do this forfeiting, and they were also interested in Iranian business because of the high pricing. And let me tell you, every single bank, the top bank, MNC bank, they were with the exception of American banks, of course, they were doing this forfeiting business. You name a bank, they were doing this secondary, and they were taking exposures on Iran. So what happens is that in Iran, the money was very expensive. So if you are an Iranian company seeking funding from an Iranian bank, the interest rate is prohibitive. It's about 8 to 10% over the prime lending rate, which itself was 8 to 10% at that time. So if an Iranian company borrows money in Iran, it pays 16 to 20% of interest. So what you do is you send somebody from your company to Dubai, open a company there, which is a shell company, and then ask your bank, which is Bank Mali Iran or Bank Siddharth Iran, or all these banks. I've seen these cases too, so I'm quoting these banks. So they will issue a say $10 million LC, and for shipment of something from Dubai to Iran, and the LC will be advised by an MNC bank in Dubai. That bank will advise without engagement on their part. The shell company will go to a shell shipping company and take a bill of lading and create other documents in accordance with LC terms, and they will go to this MNC bank. We don't want you to fund us. We don't want you to discount anything. You just forward the documents to Bank Mali Iran for the purpose of acceptance. And when the documents are accepted, then they will request the bank, can you discount? Now that you have the acceptance and you have a undertaking from the issuing bank to pay at maturity. And why can't you discount? The pricing was very good on Iran. That was close to 3.5% over LIBOR. So if you are taking exposures on countries like, for instance, India, 1% over LIBOR was actually treated as little more expensive, because I've seen transactions, large value transactions with exposures of in India being discounted at 50 basis point or 75 basis point. 1% was also big. And here the bank gets, with the same amount of money, you get 3.5%. So what happens is that what they will do, of course, they have, for instance, this particular bank in Dubai was having $500 million exposure and portfolio on Iran. And they have more transactions coming in. Now, when the transactions are coming in, they want to buy these transactions. So what they do is, they downsell some of these, their existing portfolio. And it came to me, exactly $10 million. The transaction of steel shipment, exactly $10 million, 0000 is a red flag in the first instance. How can it be? Secondly, the bill of lading was very improperly, unprofessionally drafted, and even there were spelling errors. So there was the ship called Tina L. So of course, I was a member of the ICC Commercial Crime Services. I referred to them. They informed me that, in fact, this does not exist. This vessel does not exist. And so basically what happens is this mechanism was being used through the shell companies. And unfortunately, the RM, who was the head of FIs, he raised a question with me, what's your problem on this? I said, okay, it's a number one, it's a misrepresentation of fact. It's a fraud, number one. Why should I be financing this? And secondly, what if it is not merely a fraud? What if the money is being used to attack the World Trade Center? Or what if it is used for terrorism financing or money laundering? So I don't want to be a party to this transaction, but these are real instances. So now I talked about this secondary market. Now what is clone bill of lading? So clone bill of lading started appearing in the market as a terminology, I would say, used first time by the IMB, which is International Maritime Bureau. And that was in the decade of 2000s. It picked up in 2010's decade, and now I understand that it has picked up once again. So what happens is a genuine shipment takes place, and somebody accesses that copy of the bill of lading and creates another bill of lading, which either is exact replica of the same bill of lading. In today's world of sophisticated technology, sophisticated scanner technology, you can produce a bill of lading which looks like original or even better than the original with both sides of the bill of lading and walk away with the goods. And it happened with Maersk shipping line in Hong Kong many years ago. And otherwise, you just change the name of the consignor, the consignee, the LC number, maybe the description of cargo, and produce exactly the same clone bill of lading and present to the bank and walk away with money. And when you refer to IMB, whether this shipment took place, whether this vessel sailed, IMB will say yes, because the shipment details are genuine, but actually it is a fraud. So that's another technique. And lastly, I'm talking of NVOCCs and freight forwarders bill of lading. NVOCC, and people know, non-vessel owning carrier companies, and freight forwarders are not the real shipping companies. They are actually the ones who book the cargo and ship the goods, and also are authorized by the shipping companies to issue their own bill of lading in their own name. Now the issue is, the reality of life is, based on my interaction with FIATA, because I was a member of the UCP 600 consulting group, and we have one gentleman, Mr. Abdul Malik, who was from FIATA. He did not like that ICC should remove reference to freight forwarders bill of lading from UCP 600. And he said, actually, I'm quoting him, he said, if there are 5 billion bills of lading issued in the world, 4 billion are issued by NVOCC. So he was talking about 80% of the bills of lading in the world are actually issued by NVOCCs and freight forwarders, maybe more. Now maybe I think 85 to 90% of the bills of lading are issued by these NVOCCs. But the problem is, in accordance with an IMB report, 95% of the suspicious or misrepresented bills of lading have actually been issued by NVOCCs and freight forwarders. So this is a major red flag alert for the bankers who, handle trade finance business and receive 80% of the bills of lading issued by freight forwarders. I'm tempted to quote an example. There was this very, very famous, one of the biggest shipping companies in Dubai. Actually, it's a world-renowned company. They booked a cargo, certain container, one container actually, through NVOCC or a freight forwarder specializing in Dubai, specializing in shipment to Libya. I received this, and I knew I had this experience of dealing with that company, that they had previously issued suspicious bills of lading, and I was not convinced. We referred this bill of lading. The container was supposed to have shipped the HP computers and accessories. LC came for HP computers and accessory. Documents were presented indicating shipment of HP computers and accessories, including invoices and bills of lading. We referred to IMB. IMB stated, yes, the shipment took place, the vessel sailed, this container was loaded, etc. I was not convinced. I told IMB, my friends, Mr. Michael Howlett and Captain Mukundan, I told them, no, I'm not convinced. Because I know this company is, I called that company. There was this one lady, I think that she was a Filipino, because from the accent I can make it. So for a moment she was hesitant, but she took up the file, it seems from her files, and she told me what was shipped was HP computers and accessories. I was still not convinced. I called this company, the shipping company. I got their contact from somebody from Bahrain, and in strict confidentiality, I requested this guy to tell me what was shipped in the container. Of course, he will not, but I told him, I appealed to him that you will be, by giving me the correct information, you will be helping a bank to stop a fraud. And then he told me what was shipped in that container was not HP computers, but an Infinity car. So what was shipped was an Infinity car. Now, banks deal in documents, they don't deal in goods. If documents are presented in accordance with LC terms and conditions, an issuing bank is liable to honor its commitment. A confirming bank is liable to honor its commitment. And these are the rules of UCP, which are basically disclaimers. First is Article 4A, which says that bank is not concerned with the sale contract. Number 2, banks deal in documents and not with goods. And number 3, a bank assumes no responsibility for the form, sufficiency, accuracy, genuineness, falsification, or legal impact of the documents, or existence of the cargo, or quality, quantity, condition, packing, etc. So this is an article which is actually written by a bank, for a bank, of the bank. So actually banks can take protection under these articles of UCP and claim immunity in case something goes wrong.
Can I interrupt you, Mr. Pradeep?
Yes,
Can I interrupt you?
Yes, please.
I'm sorry for that. Yeah. I agree. I mean, I was also a lot of thought process going within me about this contract and versus credit. I agree that yes, any banks are not in no way concerned, even though a mention is made in the FC about the contract number and all that. But the issuing bank, even before they issue, they agree to issue LC before they process the LC application. They enter into a contract with the beneficiary with their promise through a LC instrument. They must ensure, go through at least the relative, the paragraphs of the contract, even if it runs into about 10, 20 pages.
Yeah, that's a concept. No, that's a concept which I remember was because I worked in India in early 90s. That was a concept I am aware that it happened. And the banks were asking for a copy of the contract and etc. But, contracts can also be forged, So let me come to this particular point. So this is, as UCP 600 disclaimers apply to LCs, banks are protected in case of fraud. So my question to the audience is, right?
No, it's wrong. That's right.
I would like to see
Should
something
have
more.
full protection for case any fraud.
Can I say something, Pradeep?
Yeah, of course. I'm waiting to listen to you.
Your question is, are banks protected in case of frauds?
Yes.
Well, there has to be a substantial and corroborative evidence of fraud. If that is the case, then the banks are protected. And bear in mind that even if the confirming documents are presented and the applicant brings in some sort of corroborative evidence that a fraud has taken place or a fraud has transpired, and he gets a court injunction, then obviously there would not be, the beneficiary would not be paid, because any bank that pays to the beneficiary against the court order, that would be considered as a contempt of court.
Yeah,
And
of course.
as a result of that, there could be a possibility that the banking license can get revoked.
No, that's very true. Actually, there is a ICC Banking Commission opinion also on these injunctions, and the bank cannot, disrespect the court. If there is an injunction. I am referring actually to real frauds. In my view, every single person working in trade finance department anywhere in the world should be aware of this court case. Banco Santander versus Banco Paribas in the High Court of London. What happened was, Banco Paribas, at that time it was not BNP Paribas, it was prior to the merger. Banco Paribas issued an LC for $18.5 million plus minus 10%, and Banco Santander confirmed. Documents were presented. The confirming bank incurred a deferred payment undertaking to pay at maturity. Documents were forwarded to issuing bank. This is Banco Paribas. And Banco Paribas checked the documents. Documents were in compliance with the LC terms and conditions. And they incurred another deferred payment undertaking in their own right to pay Banco Santander at maturity. Prior to maturity, Banco Santander came to know that there was a fraud. Actually, this was a shipment of oil through a pipeline which did not exist. The pipeline itself was not existing. What to talk of non-existent cargo. So Banco Paribas refused to pay, and they did not pay Banco Santander at maturity. And Banco Santander sued Banco Paribas in London High Court. Now, this is a question I'm asking to you. What do you think was the judgment? Documents were in order? LC was confirmed? Hello?
See, Pradeep, let me tell you, the court basically favored the applicant bank, and the bank that discounted and made a prepayment under the deferred payment LCs. Basically, this was something to do more with the uniform customs and practice for documentary credits. This was one of the main reasons that why under UCP 600, negotiation was allowed, a prepayment is allowed. So this actual case opened the eyes of the ICC Banking Commission, saying that finance is the blood of business, and therefore, where a credit is issued by deferred payment, it is not necessary that only on the due date the proceeds should be given to the beneficiary.
Okay, so fine, thanks. Anybody else would like to, share their viewpoint? What do you think was the judgment?
It was in favor of Bank Paribas. It was in favor of Bank Paribas.
Yeah, anybody else?
I agree, it is for Paribas.
So assuming that you were the judge. Anyhow, let me endorse what my friend Mr. Zahoor has mentioned. The judge ruled that, of course, that it is Banco Paribas need not pay because there was a fraud, which they came to know prior to the due date. Let me, now it is becoming a little technical, but since my friend Mr. Zahoor has mentioned about this, so I will tell the judge also ruled that since this was a deferred payment undertaking, the bank did not pay. Had it been a bill of exchange, which was accepted by the confirming bank or by the issuing bank, the situation would have been different, because the confirming bank in that case would have been a holder for value or holder in due course of the bill of exchange, and bill of exchange is an instrument which is covered under bill of exchange laws or negotiable instruments acts, and therefore even if there was a fraud, the bill of exchange, if there was a bill of exchange, then the issuing bank had to pay. Anyhow, there was another court case, Credit Lyonnais versus Canara Bank in the French court. French court did not agree with London High Court, and they mentioned that in the ruling, they mentioned a fraud is a fraud, whether it is deferred payment undertaking or a bill of exchange, the issuing bank did not pay, even if there was a fraud. Now, there is another court case, it's exactly the same. Here it is BNP, and this is actually a solo industry case. CAI, Credit Agricole Indosuez, they issued an LC. BNP confirmed the LC, and because of the fraud, CAI, Credit Agricole Indosuez, did not pay at maturity, and BNP sued them in Singapore court. So my question would have been, what do you think was the judgment? Of course, the judgment is the same as was the case in this Banco Santander versus Banco Paribas. Now, as a fallout of, because I was a member of the consulting group, and actually the ICC Banking Commission did not agree with the court case. And, the US USCIB, which is U.S. Council of International Business, which represented ICC USA, and they mentioned that in case if it was a US court case, the decision of a US court would be different in this case, and a US court would have ruled that no, the issuing bank would have been responsible for the purpose of reimbursing the confirming and negotiating bank. There was, when UCP 600 was being drafted, there was a lot of this lot of agreements and disagreements between the drafting group and the consulting group on many key issues which were actually holding the drafting process. So every single draft of UCP was first referred to consulting group, and the consulting group will then agree and etc. So now what happened is what Mr. Zuhur is talking of, the Article 12B of UCP, whereby a bank which is issuing an LC authorizes a nominated bank to prepay or discount his own obligation. The idea was to fix this case of Banco Santander versus Banco Paribas, because Banco Santander, in its argument, they mentioned that we follow certain international practices, which my friend Mr. Zuhur is talking of, uniform customs and practices. Now, the judge said, okay, show me the UCP. And judge said, where is it written that you can prepay? What he mentioned was, under the UCP, you were liable to undertake a deferred payment undertaking to pay at maturity. And then at maturity, you were liable to pay. Now you have discounted on your own volition. In fact, this Article 12B was actually drafted by UCP 600 Consulting Group, not by the drafting group, whereby the 10 key issues which were not being decided, this was one of the key issues whereby the most national committees in the world voted that this case of Banco Santander versus Banco Paribas should be fixed. So now there is a closer home. I'm running out of time, but I'll try to do as much coverage as possible. This is Abu Dhabi Islamic Bank. They confirmed an LC issued by Awal Bank Bahrain. This was $40 million. They confirmed. And what happened was they did not honor their commitment at maturity. And there were 17 court cases involving Abu Dhabi Islamic Bank on Awal Bank or International Banking Corporation in Bahrain, which were later on placed on moratorium by the regulators in Bahrain. So what happened was they refused to pay for the reason that there was a fraud. And there was a non-existent cargo, actually. So this court case eventually went to Supreme Court of New York. And my quick question, what do you think was the judgment? There was a fraud. Awal Bank went into moratorium and they did not honor and they said that, of course, there was a fraud. And they raised the defense of LC fraud. What do you think quickly? Okay, let me give the answer. The Supreme Court ruled that Abu Dhabi Islamic Bank was liable to pay, notwithstanding whether there was a fraud or not, because this was a structured, so-called structured trade finance transaction, and they were also aware. In fact, they admitted that we know that this mechanism, these kind of letters of credit are actually used to raise funding from the banking system. Now, what is trade? To sum up, hundreds of millions of US dollars of decisions every day are being taken by the banks against papers or documents. The problem with the documents is documents can be forged. If banks believe that they are protected under the UCP 600, this is my view, very strong view, that in case you have become a party by either issuing the LC or confirming the LC or simply facilitating that transaction, which turns out to be an attempt for money laundering, terrorism financing, illegal flight of capital, or any other financial crime, then the bank cannot take protection under UCP, because in the today's world of compliance regime, and I'm referring to just quick reference to US Patriot Act. Some live cases. Now we have little time, but I'll show you another, this one. This, you must have heard of a movie called Perfect Murder. This was a perfect fraud. So there was this company which actually established itself in Liechtenstein, Liechtenstein. Sometimes I mispronounce their name. And they went to lawyers that our company has been set up. This is our capital, etc., etc. So before we, actually start business, can you act for us as a fiduciary, in a fiduciary capacity, and can we use your address? The lawyers agreed because they were getting good fees out of it. So they had a perfect address in Lugano, and they approached a Middle Eastern oil company and offered them $2.5 million worth of caustic soda at a price just below the market price, and presented fake shipping documents and walked away with $2.5 million. And they were untraceable. This is a real fraud which happened. Another fraud happened in Jordan. It was an attempted fraud. When they issued one of the Jordanian banks issued the LC, and they misspelled the name of the inspection agency. Now the inspection agency, actually what happened was the beneficiary knew that in order to take money under the LC, they should also present documents strictly in accordance with the LC number and LC terms and conditions. So what they found that there was a misspelling in the name of the inspection agency. So they created a document with the same misspelling. The Jordanian bank caught, okay, this was our error, but this guy is presenting documents, and they called this beneficiary, can we have discussion? They refused. Now it's another live case which happened in Bahrain in 3 banks. I will share with you another document. This is a PDF document. See, a company based in register in Netherlands, Antilles, opened an account with a bank in Vienna, and their owners or representatives visited Bahrain and met 3 importing companies and offered them some cargo just below the market price. And they said that we can supply to you. The goods are lying in Kuwait in a bonded warehouse. We can supply, but we need LCs. So 3 parties in Bahrain, actually, Mr. Sajjad has raised hand. Yes, Mr. Sajjad. Okay. So what happened was they claimed to have shipped the cargo from Kuwait to Bahrain by truck and presented these 2 documents. Now I'm showing you this document. This is basically an exhibit. And if you look at it, this is how it looked like. There is a company called Global Goods Transporting Company, Kuwait. So anything unusual you can see in this document, it's a road transport document, quickly. Okay, let me tell you, this is called CMR. In GCC, there is nothing like CMR. CMR is essentially a trade transport document in EU. And it is issued subject to CMR, United Nations Convention, which is known as in brief CMR Convention. So this kind of document is not used in GCC. There is another document I'll show you. This is a certificate of origin. If you look at this certificate of origin, it is in English then in French, and then in Turkish. So Kuwait Chamber of, a Chamber of Commerce in Kuwait can never issue a document like this. So there's a made in Kuwait, and this is the description of the goods, etc. And I will show you the certifying body, some name in Turkish also. And there is a stamp here, Chamber of Commerce Kuwait. There is nothing called Chamber of Commerce Kuwait. There is a Kuwait Chamber of Commerce and Industry. And then if you look at within the stamp, there is an eagle. And this eagle is actually the UAE stamp, So obviously this was an outright fraud. Documents was strictly in accordance with LC terms and conditions. One of the legal, legal advisor to a bank in Bahrain met me, and he says that we are not going to pay. And we are going to pay because documents and banks deal in documents. I told him, you are absolutely wrong. Your bank should not pay. And there were 3 banks. I stopped these transactions in these 3 banks. These 3 banks were actually a member of the ICC Bahrain. So that's why I came to know about this, and we immediately issued an alert to all the banks, and we stopped or saved 3 banks from documents. And then there were problems with the presenting bank and whatever. So this is what it is. Malavan, we are actually running out of time. So
it's expected.
As expected. So if you allow me, I can take another 10-15 minutes, or what do you think?
It's purely up to the participants. I think, Mr. Pradeep, it will be a good idea if we just open the floor, get people to ask questions. I think many of them are itching to ask you questions.
Yes. Okay. What I will do is, I will just tell them that, of course, we will be sharing this, these slides. This is a red flag that a company approaches you for issuance of LC covering goods, which are not known to be the normal course of business. Real cases, I was in Dubai. There was this company in Dubai which was dealing in textile goods and ready-made garments. They approached me for issue of an LC covering 1 million dirham for import of onions from India. Of course, I did not open this LC. Back in ABC, and this is a transaction where I wanted to quote Mr. Vijay. Vijay, you are there?
Yes.
Or he's left?
Okay. No, I'm very much there.
There used to be a company called New Medical Center. Everyone in Middle East knows about the frauds which this company perpetrated. They failed last year in 2020, leaving $6.6 billion of outstanding with the banks in the world. And they were highly respected, highly reputed company. This company actually, I had a problem with one of these LCs. I was on leave. Unfortunately, my guys, without checking with me, they accepted the documents. We issued an LC for $1.6 million on Thursday evening, 4:30. Next day was Friday, which was Dubai, 5:30. Next day was Friday. Next day was Saturday. On Sunday morning, I received $1.6 million worth of documents, which is impossible. How the shipment could have taken place on a Friday and documents presented to a bank on Thursday who negotiated and forwarded. I had a problem. Fortunately, there was a discrepancy, but because of lack of knowledge on the part of certain people, I was just 3 months old in ABC. They thought that in case the discrepancy is accepted by the, apologies for that, if the documents have been accepted by the applicant, the bank is to honor. Anyhow, I was not liking it. In 3 months' time, the same company, New Medical Center, approached me for 3 letters of credit for $4 million, covering shipment of marble slabs from India to UK. And I was very unhappy. I said, how can this company approach us? for this kind of thing. They are a pharmaceutical company. They should be importing pharmaceutical products, and they should be, healthcare equipment or appliances. They cannot import, this kind of stuff. Anyhow, relationship manager wanted. I said, I'm not going to support. My boss told me that he's not going to support this transaction, and RM thought that he will go to the credit committee, and Mr. Vijay Srivastava did not support this. He was a CRO and he did not support this transaction. He said Pradeep is right. So I won't there are some red flag indicators which we will be sharing. And in the last slide, I actually have referred to the FATF Egmont Group red flag indicators, which were recently released in the month of March 2021. And it is some kind of, so we'll be sharing with you. So now this is my last slide about my own company, Taneja Global Trade Consulting Company. It's a kind of specialist company incorporated under the laws of Bahrain. And my company is actually advising banks, law firms, export-import companies, audit firms also about the, trade finance transactions, tax, and other things. So in case anybody has anything, then in Bahrain, you're most welcome to approach me for. So that's it. So this is the last one, Q&A.
Yeah.
So I took 4 minutes extra.
Mr. Bilal has a question. He's asking if any of the US, any of the banks have been penalized by the US regulatory agency for TBML.
Trade-based money laundering is a crime in US also. US authorities, I will also refer to Zahur to reconfirm this one, are supposed to have penalized, or they're known to have penalized several banks for violation of Iran, Iran sanctions and sanctions. Yes, frauds, Iranian transactions which are known to be, which are actually frauds. So in fact, one of the earliest banks which was penalized by the US regulators was Ibn Amro Bank. And because they were facilitating these transactions, and many of them were fraudulent transactions. The amount that was penalized was $80 million. But Ibn Amro, took a lot of decisions, and they agreed to pay not only $80 million, they also paid another $5 million to the US authorities for community services. And because they are very, very active, this is the largest foreign bank in US was Ibn Amro. So they did not. So yes, they were penalized not only for sanctions but also for frauds, because the mechanism of trade finance was used for these fraudulent transactions. Now, if you are talking of specifically trade-based money laundering, I understand a bank in China was penalized. Can't reveal the name because it came to me from confidential sources. And in fact, I also heard from the same force that after penalizing these banks, US authorities have thousands and thousands of documents with them. Now, what they're going to do is also look at the counterparties of the banks. Supposing, I received an LC from, say, one bank which has confirmed the LC, say, in the UAE or Switzerland or one. The transaction happens to be a fraudulent transaction or a violation of sanctions. Then the US authorities will also go after it's a matter of time. Right now, it has not happened, but it's a matter of time. It's going to happen. Zahur, would you like to add something?
Not really.
Yeah, on the same point. But it will come, I can tell you. The banks which are complacent, okay, I was not penalized, may face some music from the authorities.
Yeah, I would say historically, if you look at the if you go back to 15 years or 20 years, most of the British banks have been fined heavily. This is what is
Yes.
my analysis.
Yeah.
And when I talk about British banks, I think in my last article, somewhere in Documentary Credit Insight or in some paper I wrote, and I think LinkedIn also I put something that it's basically banks who were having Iranian desk
Yeah.
penalized, and those banks were Lloyds Bank, then Standard Chartered Bank, and Australia.
Yeah.
And
Standard Chartered Bank, $375 million.
yeah, Standard Chartered Bank was penalized the most for doing Iranian transactions.
Yeah.
Apart from that, Lloyds Bank also was there. So
Yeah.
as I said,
Lloyds.
it's a big chunk of all British banks who were basically into Iranian transactions. And the Iranian banks, they had their branches in UK. Bank Tahririyat, Bank Milli Iran, and Bank Sapa, and the Central Bank of Iran also had some rep office over there. So that's why for all this, as you rightly said, the trade frauds are basically penalties are there. So the US has imposed a lot of penalties on Standard Chartered Bank also, because the reason being is that the LCs were denominated in US dollars.
Yeah.
So
Any other question, Melvin, that you have received on the chat box or separately, or audience would like to pose?
No, they haven't typed. What I'm encouraging them to is ask the questions directly.
Yeah, please.
Yes,
we are
Mr.
here.
Taneja, I have
Yes.
a question. This is Muhammad Arshad. Thank you very much for your excellent presentation within a shorter time. Regarding this, one point you touched base was the discounting against deferred payment and the acceptance, the protection in terms of the legal injunction in case of an acceptance bill, right? Now, tell me from your, legal or the trade point of view. Now, as an exporting bank, if we do a discounting on acceptance bill, should we call for the accepted bill of exchange to get that protection as a holder in due course, or is it an acceptance by SWIFT?
No. There is no need this one. If the bill of exchange is drawn on you as a confirming bank or nominated bank, you can keep the bill of exchange with you, and because it's drawn on you, so you can keep. And in your cover letter, you write to the issuing bank, the bill of exchange has been duly accepted by us. And so basically, whether the bill of exchange is available by acceptance and acceptance by you as a nominated bank, then you don't need to forward the bill of exchange. And if the bill of exchange is sent to the issuing bank, I don't think that there is a global practice of calling for that bill of exchange accepted by the issuing bank, unless you are selling that bill of exchange through in the forfeiting secondary market.
Yeah, okay. My question was if it is drawn on the issuing bank.
No. There is no need. You should simply keep the copy of the bill of exchange with you, and especially although the banks are supposed to keep copies under the regulatory regime also, copies of all the documents with you for a certain amount of time in accordance with the regulatory requirements. 10 years in Bahrain under the money laundering laws, at least 5 years. However, these are records, which are routed through your mechanism. However, in today's world of pandemic, you must see that all copies of the documents, and including the backside of the bill of exchange. And if there is a stamp and the backside of the bill of lading is retained with you. Banks commit this mistake. They take a copy of the bill of lading, but they don't take a copy of the backside of the bill.
But my question is, now, if we don't have the accepted bill of exchange, and if there is an issue under the LC and there's any court order not to pay, so as a discounting or negotiating bank, probably if we have the accepted bill of exchange, we can take that
No.
on that route and get the through the
No. Mr. Mohammed, sorry to interrupt. Let me explain to you. ICC, about maybe 2 years or 3 years ago, the ICC Banking Commission has issued a guidance note. It's not a position paper. And this was a query being raised by from all the national committees of the ICC in more than 90 countries, whereby one question was raised from the national committees: why do you ask for a bill of exchange in the first instance? Because bill of exchange is not a part of the export documents. It's a separate document drawn by the party on a bank. So if say 20 documents are presented, 19 documents, which are the pure export documents, they are in accordance with LC terms and conditions, but the bill of exchange is not. Can the issuing bank penalize the exporter, because of the bill of exchange, which is who has to accept that bill of exchange? Not the applicant. It's the issuing bank which has to accept the bill of exchange because it is drawn on him. So what is the need of this one? So ICC has done a survey in most legal systems, and I can tell you, neither the ICC rules require presentation of bill of exchange, nor the banking laws, anywhere in the world, including in India and other countries, require a bill of exchange as a must document to be presented alongside the export documents. No court has issued such a, this position or ruling that why the bill of exchange is required. So ICC actually has, in its simplified LC format, they have recommended strongly not to call for the banks, not to call for the bills of exchange. And I can tell you, banks in Bahrain, which are members of ICC Bahrain Trade Finance Forum, they do not ask, they implemented this. The first bank which implemented this ICC recommendation was my bank, and we never issue a call for the bill of exchange. Secondly, if there is an injunction, for instance, there is an injunction, it has got nothing to do with the bill of exchange. Injunction is on the payment. So whether it is bill of exchange or not. So the bank, which is the confirming bank, if he is under injunction not to pay, or if it is issuing bank, then the issuing bank, in the best practices, in the interest of the global trade best practices, that bank, if the transaction is genuine, that bank should go to the court and, go to the court and lifting the injunction. I can tell you why the Indian banks are highly respected, because I come from India and I've seen 1989, there was this court case involving Canara Bank versus UBS. At that time, I think it was UCP 400. And what happened was the applicant brought an injunction because of his problem with a Swiss supplier. He brought an injunction on the Canara Bank not to pay. And Canara Bank, on its own volition, they went to the court in Bombay High Court saying that this injunction should be lifted for the reason it will affect the reputation of our bank in case. And I can tell you that this happened. So this is the actually recommended practice of the ICC, that in case of injunction, the bank should go to the court and file an appeal for injunction. So that is it.
All right. All right.
Second, whether the bill, let me also come to this, whether the bill of exchange was presented or not, in case documents were accepted, the acceptance is actual acceptance by sending a SWIFT empty format to the nominated bank that I accept to pay at maturity, or the bank is silent for 5 banking days following the date of presentation of the documents. If the bank is silent, then it is deemed to be acceptance of the documents. So then the bank, the issuing bank or whoever is, they cannot take plea that document are discrepant or we don't want to pay or whatever, they must pay. So you don't need to enforce a bill of exchange. The LC undertaking in accordance with the international practices itself is enforceable.
Mr. Pradeep, we have a Mohammed Ali who has raised his hand. Mohammed, do you want to ask your question?
Yes.
My question is, friend,
Yeah, I know. Sanjay sir, the question is to you as well as from the experience of Mr. Zahur as well. I just wanted to know, and maybe enlighten the audience also, in terms of the very TBML, trade-based money laundering. How would you see this concept of trade-based money laundering in the increased world of digitization, and especially on the point of blockchain, etc.? How this is going to withstand?
Yeah, Zahur, would you like to comment, or should I go ahead and?
I think you can go ahead, no problem.
Okay, listen. See what happened when ICC created a working group on digitalization, and they formed their first group, which was to draft something called Uniform Rules for BPO, URBPO, that bank payment order. I had this concern, and I and Zahur, we have a common, highly respected guru or a friend and mentor, you can say, Professor James Pan, who unfortunately expired maybe 2 years ago. He was the director of the Institute of International Banking Law and Practice, as well as also the chairman of the working group of ISP 98, and highly respected as chairman of the American Bar Association, and he led US to United Nations for drafting of UN Convention on Independent Guarantees and Standby LC. So I'm just giving that his background, and before I quote him, he told me, I think your BPO will fail. And I asked him, why do you think so? He says, and even I felt like that when you are presented with documents, you can touch the documents, you can feel the documents, you can check on the documents. But when you are not presented with the document and you are presented with data, which is digital data. Now, this data can also be manipulated. This data can also be, since there is no physical presentation of document, so I can use the same data and give it to different banks and walk away with money. So whether the digitalization could control, it may not control at the existing level. However, ICC has taken that initiative known as DSI. Actually, ICC Bahrain is not a part of this initiative, but we will be reviewing documents and commenting when the documents are received. So basically, one of the idea was, and this is what was felt, that through blockchain technology, it would be possible if duplicate set of data is presented to different banks and all that. Now, IMB also, if you know that after this Singaporean trade commodity frauds last year, IMB has also, which I told them 10 years ago, they have accepted. I mean, it's not that they have accepted my suggestion, but what happened was, in case multiple bill of lading has been presented to IMB, if it was presented to, say, Abu Dhabi Commercial Bank, then it is being presented by, say, Abu Dhabi Islamic Bank to IMB for check. Then second time when IMB receives the same bill of lading from another bank, then they will inform the other bank that, look, this document was presented to us in the past. Now for blockchain technology, with my limited knowledge, what I feel is it would facilitate, provided, that's my discussion with the technologists within ICC, Banking Commission, and that provided that all the parties are linked or on the same platform. I mean, you are talking of issuing bank, nominated bank, exporting bank, shipping company, and maybe the customs as well. They should be on the same platform to facilitate a transaction through the mechanism of digitalization. So for instance, if a shipping company issues a bill of lading, say in something called e-bill of lading, and that bill of lading is presented to a bank here, and they want to issue a kind of endorsement or a delivery order, the customs authorities will call for a copy. They don't have e-commerce laws in certain countries, so they don't recognize e-bill of lading. So the customs will ask for a copy of the shipping document. The shipping company itself may not, their agent, for instance, they may not be the company itself, but their agent will have to issue a delivery order on the shipping company in paper form. They cannot issue in digital form because authenticity, etc. So many issues attached to digitalization. That's the current scenario. This is what I feel. However, going forward in the future, I read a statement from Mr. David Menel just about a few days back, which he said that the work or the progress on digitalization in the last 10 years was as much of progress was not achieved during the last 10 years than during the last 15 months after pandemic. Now everybody is talking of, so that's my understanding and response.
Okay, sir.
Yeah.
Can we have one more question, Mr. Pradeep?
Yeah, of course.
Okay, from the participants, if you have any other question, please raise. We are about to wind up.
Hi, this is Rohit. I have a question. Could you please help understand, what roles do you feel in the enterprise fraud management system? Because now I see a lot of enterprise fraud management system are catering to trade-based frauds. So do you think, there could be a possible system detections, we can have machine learning rules or static rules in place to help us pick up some anomalies for trade-based transactions?
Yeah, frankly speaking, my knowledge about this is very limited. I'm a technical guy rather than a technological guy. And I've not heard, although I do my readings to update myself, I subscribe to some of the global trade magazines. I have not heard of such an initiative of enterprise management system having, this links with trade. Maybe this is under development or something. But I didn't read anything much about this. Maybe my friend Zahoor and even Muhammad Ali, if they have read anything about this, they can participate. Zahoor, any idea? Hello?
Really? Not really.
Not really. And Muhammad?
Sorry, boss, I also don't have any information on this.
Okay. What I suggest, Rohit, what you do is, as advised by Mr. Malvan, you please send him an email and we will check. We can also check at the ICC level and seek their viewpoints on this, and then we can revert to you through an email.
Surely. Thank you so much. Thank you. And it is a very intriguing session. So many details, so much to learn from your kind experience. Thank you so much. It was a wonderful Saturday. Well spent.
Thank you, sir. Thank you. God bless you.
Sure. Thank you very much. So, Mr. Pradeep, shall we bring the session to a close?
Yes, of course.
Okay, brilliant.
Thank you.
Thank you.
Thank you to you, and thanks to all the participants.
Sure. Thank you, everyone. So we had requested everyone to type the name that has to appear on your certificate. Just if you have not done already, just message it on the Zoom chat so we can prepare the certificate and email you. And when we are sending you the certificate, we'll also send the recording of the session. Feel free to share the video with your friends and colleagues who could not attend today. And our next session will be on data governance by Mr. Bashir Al-Naqi. That will be on the 10th of July. So we'll include that invitation also in our mail. Thank you very much. Stay safe. Enjoy your weekend.
All the best to all of you.
Thank you, Pradeep. Take care. Stay safe.
Thank you.
Bye-bye.
Thank you.
Thank you.
Thank you, Mr.
Thanks,
Pradeep.
everyone. Thank you so much. Bye.
Thank you.
Let me just stop the recording.